Hello and welcome to yet another session of RBI Circular Gist, and that is for the month of January 2022. Before I could go ahead, I would urge all of you to kindly subscribe to your channel Knowledgist. तो नॉलेजिस्ट में आप सबका स्वागत है और शुरू करते हैं हमारा मोस्ट पॉपुलर शो दैट इज आरबीआई सर्कुलर जिस्ट ऑफ जनवरी 2022 with MCQ. And I am very grateful to all of you for loving our RBI circular 1 year gist, that is for the month of 2021, for downloading the book. And I am also glad that it has helped in your CBI SO and SBI CBO exam, because most of the questions were directly asked from the subject matter we covered. The 1 year gist and the month of January 2022 gist with MCQ is now available in description. Link is available in description. Do download. And all the courses you can find it out in our website, that is knowledgist.in. And you join our official Telegram channel, that is telegram/knowledgist. And we are going to launch RBI Grade B course on huge demand of our students. So for that we are going to create a group, that is telegram/RBI Career. Link is there in description too. Do join. And yes, I believe that all of you have subscribed us. Let's begin. Now RBI allows offline digital payments. So after huge success of online payment segment, RBI now wants to test offline digital payments. So what is offline digital payment? To push the digital transaction in rural and semi-urban areas where network connectivity is an issue, there RBI wants to push the offline digital payment. So the offline digital payment will be up to rupees 200 per transaction, subject to an overall limit of rupees 2k, that is 2000. And how does it work? These transactions will not require an additional factor of authentication. The Reserve Bank of India said, adding that since the transactions are offline, alerts by way of SMS or an email will be delivered to the customer after a time lag or after some time. तो मैं हिंदी में भी बता देता हूं क्योंकि सेशन बाइलिंगुअल होने वाला है. तो आरबीआई ने ऑफलाइन पेमेंट अलाउ कर दिया है. मिनिमम ट्रांजैक्शन 200 का होगा, मैक्सिमम ट्रांजैक्शन 2000 का होगा. जैसा कि आपको पता है कि नेटवर्क कनेक्टिविटी के कारण से ही ये स्टेप लिया गया है रूरल एरिया में. तो जो अलर्ट है, एसएमएस अलर्ट वगैरह, वो पेमेंट हो जाने के बाद कस्टमर को मिलेगा. उसमें टाइम लैग यानी कि टाइम डिफरेंस हो सकता है, यानी कि पेमेंट अभी हुआ और जो उसका अपडेट है ईमेल या फिर अलर्ट जो है एसएमएस में, वो थोड़ी देर में आएगा. होप यू गॉट इट. सो व्हाई आरबीआई अलाउज ऑफलाइन डिजिटल पेमेंट्स? RBI has been working on allowing offline payments for a few years and had included it in its vision document in the year of 2019 to 21 for payment and settlement systems. Consumer behavior. In consumer behavior, RBI said that the document released in May 2019 has been driving growth of digital payments as consumers are embracing mobile technology. As you have seen our economic survey session, you could have find out that how this UPI transaction has got momentum in India, and the maximum UPI transaction is below rupees 100, because for small amount of payments people are using UPI. So in these cases where you go to buy vegetables, etc., you don't need network connection to make a payment. Sometimes due to network connectivity, it becomes more complicated than a cash payment. So to ease all of that, RBI now allows offline payment, and it was in their vision document 2019 to 2021. So that's why RBI has allowed the offline digital payment. As you have seen, nowadays exam pattern, question pattern has changed. We have also relevant MCQs at the end, but you need to understand why of everything. Whatever you are studying, you should find out why this is happening. What is the rationale behind it? क्या कारण है जिसके वजह से आरबीआई ने ये स्टेप लिया है? तो अगर आप ये बात जानेंगे तो आगे जाकर आप एलिमिनेट कर पाएंगे. आजकल राइट आंसर जानना जितना जरूरी नहीं है, उससे ज्यादा जरूरी है कि आपको एलिमिनेट करना आना चाहिए. ठीक है, तो चलिए आगे बढ़ते हैं. While India has witnessed a boom in sales and cheap smartphones and even cheaper data connections, internet connectivity is yet to reach many parts of the country. That is another issue. Yet there is network connectivity issue. The latest available data from the World Bank showed that in 2019, 41% of India's population had access to an internet connection. So that's why the offline payment system or the offline payment platform has to reach 59% of Indian. So that could be somewhere around 70 crore plus Indians. So huge market, huge potential in offline digital payment segment. Offline transactions are expected to give a boost to digital transactions in areas with a poor and weak internet and telecom connectivity, particularly in semi-urban and rural areas. Hope all of this clear. Simple English में था तो हिंदी में उसको कन्वर्ट करने की जरूरत मुझे महसूस नहीं हो रहा है. होप यू गॉट इट. नेटवर्क कनेक्टिविटी अभी भी 41% लोगों के पास ही पहुंचा है, तो 49% लोगों के पास, दैट मीन्स समवेयर अराउंड 70 करोड़ प्लस पीपल नाउ नीड ऑफलाइन डिजिटल पेमेंट. Now RBI notifies market making plan to promote retail participation in G6. So I hope that all of you have covered our class or session on retail direct scheme of Reserve Bank of India. So under that, RBI wants to popularize that platform. RBI has enrolled the scheme of retail direct gilt accounts. Many people, those who are aware with the functioning of RBI, has opened the account. Those who are ready to participate in the auction process, or those who have already opened demand account, they are free to use, or they have the technical know-how to use, but it is not gone to the last mile consumer. आखिरी आदमी के पास या फिर हर एक कंज्यूमर के पास जी सेक नहीं पहुंचा है, या फिर जो आरबीआई ने ओपन अप किया है रिटेल कस्टमर्स के लिए गवर्नमेंट सिक्योरिटीज में इन्वेस्टमेंट, वो सबके पास नहीं पहुंचा है. अभी भी पार्टिसिपेशन जो है बहुत लो है, क्योंकि आपको सेपरेट अकाउंट आरबीआई में ओपन करना होता है, और जो लोग डीमार्ट वगैरह में ऑलरेडी ट्रांजैक्ट करते हैं, शेयर ट्रेडिंग, म्यूचुअल फंड वगैरह में ही इन्वेस्ट करते हैं, उन लोगों के लिए है. बट जैसे कि आपको पता है कि आरबीआई चाहता कि ज्यादा से ज्यादा रिटेल पार्टिसिपेशन हो, तो इसीलिए आरबीआई वांट्स दैट देयर जीसेक प्लेटफॉर्म और दिस रिटेल डायरेक्ट गिल्ट अकाउंट स्कीम शुड बी पॉपुलराइज्ड बाय मार्केट प्लेयर्स. So Reserve Bank of India notified the market making scheme to promote retail participation in government securities by providing price or quotes to retail direct gilt account holders, enabling them to buy and sell securities under RBI retail direct scheme. Prime Minister Narendra Modi, however, launched this scheme in November 12, 2021, one day before we have also covered this session, I remember. I hope all of you have seen that session too. To provide one-stop access to facilitate investment in government securities by retail investors. To provide liquidity in the secondary market, a market making arrangement wherein primary dealers shall be present in the NDS OM platform, odd lot and request for quote segment throughout the market hours, and respond to buy or sell request from retail direct gilt account holders has been notified. So what is the concept here? What is the market making? That means they want to popularize the GSEC segment. So they want that in their NDS negotiated dealing system order matching platform, all the accounts or the account holders, those who are buying and selling the RBI issued government securities, they want to popularize these products, and they want players who will instantly sell them in secondary market, so that the account holder can redeem the money at any time and can get cash immediately. So they want to make the RBI retail direct scheme more liquid, and for that they want it to be participate in secondary market, in stock market, like the exchange traded funds are traded in stock market, mutual funds that cannot be sold immediately, closed-ended mutual funds that are sold in exchange traded funds. so it can be sold, as it cannot be redeemed immediately, it can be sold in secondary market. Similarly, G-Secs of 91 days, say the treasury bill of 91 days will only mature after 91 days. But RBI wants that the G-Sec holder or the T-bill holder should get cash immediately by selling the same in secondary market, and for that RBI wants to popularize that product and making a market making arrangement, or they want a market or secondary market for G-Secs in stock markets. According to the market making scheme, primary dealers will rely on the know your customer verification of the RDG account holders done under the retail direct scheme. No further KYC verification is required for selling it in secondary market, remember. And request for quotes segment of NDS OM. The request for quote segment refers to on-screen negotiation system of RBI's NDS OM system. So now under this scheme, if the primary dealer who wants to sell these securities held in the retail direct gilt account will not ask for additional KYC if that account is already KYC compliant. And you know that opening a RDG account, you need to have the proper KYCs in order. NDS OM is nothing but the negotiated dealing system, or order matching refers to RBI's screen-based trading like the NSE BSE platform. Okay, it's electronic order matching platform. As you give order, if you want to sell, if someone wants to buy, the orders will match and the sale proceed will go ahead, right? So under the RBI direct scheme, retail investors have the facility to open an online retail direct gilt account with RBI. These accounts can be linked to their savings account like in your Demat account. Okay, so let's move to the next point. Now, Airtel Payments Bank, designated as scheduled commercial bank. Anubrat Biswas is the MD and CEO, headquartered New Delhi. Airtel Payments Bank has got the second schedule status by Reserve Bank of India. So it is always as per the RBI Act 1934. So we talk a lot about second schedule of RBI. What is the first schedule of RBI Act 1934 then, and why we don't talk about it? It is nothing but the 4 parts of the country where Reserve Bank of India can work. So at that point of time in 1934, India was thought to be divided in 4 parts: north, west, south, east. So there are the 4 areas where Reserve Bank of India can have its functionalities. So that is the first schedule, and second schedules are the member banks or the REs or the regulated entities of Reserve Bank of India. So the banks that are listed under second schedule are called second schedule bank, or banks under second schedule, or scheduled commercial banks, scheduled cooperative banks, scheduled payments banks, scheduled SFBs. Also there are scheduled cooperative banks too. Some local area bank etc. are not in scheduled status, and those who are not in scheduled status miss out a major benefit. What are the benefits of being a scheduled commercial bank or being a scheduled bank? They are listed on second schedule. They should have a minimum paid up capital of 5 lakhs or more and it is all about at the time of the inception of Reserve Bank of India. They maintain a cash reserve ratio with RBI. They are authorized to borrow funds from Reserve Bank of India. They are comparatively more stable. Now let's talk about a new rule, that is aligning LCR norms for small business accounts with Basel standards, and RBI hikes the funds cap by 50%. I know all of you have gone through our Basel class inside our application, is because it is part of a premium class, premium courseware. So there I have clearly discussed about Basel and the components of Basel. The latest Basel version is the Basel 3, but after Basel 3 in somewhere around 2012 and 13 it was felt there are more liquidity standards to be maintained by the banks. So there are enhanced Basel 3 norms where LCR and NSFR plays a very vital role. जहाँ पे बेजल तो था, बेजल 3 लेटेस्ट वर्जन है, मगर बेजल 3 इंप्लीमेंटेशन होने के 4-5 साल के बाद ये फील किया गया कि बेजल में कुछ कमियां हैं बेजल 3 में, तो उसके लिए लिक्विडिटी स्टैंडर्ड को बढ़ाया गया 2013 के आसपास। तो जो लिक्विडिटी स्टैंडर्ड में जो दो बड़े मेजर डेवलपमेंट्स हैं वो हैं एलसीआर और एनएसएफआर। मैं आगे एक एक स्लाइड में आपको एलसीआर एनएसएफआर का एक थोड़ा सा झलक दूंगा, बट मैं आशा करूंगा कि आप मेरे बेसल का जो सेशन है, जो प्रीमियम कोर्स है वो एनरोल्ड स्टूडेंट्स के लिए है, उसमें जाके देखिए। बैंकिंग के हिसाब से बहुत आसान शब्दों में मैंने उसको समझाया है, ठीक है। तो जो स्मॉल बिजनेस है उसका जो कैप है, जिसको एलसीआर में काउंट किया जा रहा था, 5 करोड़ का कैप था, अभी वो बढ़ के 7.5 करोड़ हो गया, ठीक है। तो एलसीआर क्या है? लिक्विडिटी कवरेज रेशियो मैं आपको बता देता हूं। एलसीआर है लिक्विडिटी कवरेज रेशियो, प्रमोट्स शॉर्ट टर्म रेजिलियंस ऑफ बैंक्स to potential liquidity disruption by ensuring that they have sufficient high quality liquid asset to survive an acute stress scenario lasting for 30 days। अगर कोई बहुत खतरनाक परिस्थिति हो, जैसे कोविड वगैरह का टाइम है, वहां पे आपके पास फंडिंग ना आए, पैसा आपके पास ना आए, तो आपके पास 30 दिनों के लिए इतने हाई क्वालिटी लिक्विड एसेट होने चाहिए, कोई भी फंड आउटले या फिर फंड आउटफ्लो आपके बैंक से होता भी है तब भी आपके पास 30 दिन के लिए उतना लिक्विडिटी आपके पास रहना चाहिए। जैसे रॉन ऑन बैंक रिसेंटली सेंट्रल बैंक ऑफ इंडिया के एग्जाम में आया था, रॉन ऑन बैंक, क्योंकि लोग डरते हैं कि बैंक डूब जाएगा, बैंक में विड्रॉल करने के लिए आते हैं। तो ऐसे स्थिति में आपके पास 30 दिन के लिए सफिशिएंट कैश होना चाहिए। आपके कितने भी आउटफ्लो हो, कितने भी लोन डिसबर्समेंट हो, कितने भी विड्रॉल हो, कितने भी इन्वेस्टमेंट अपॉर्चुनिटीज हो जहां पे आप पैसा देना चाहते हैं, आपके पास 30 दिन के लिए उतना हाई क्वालिटी लिक्विड एसेट होना चाहिए। हाई क्वालिटी मतलब जिसको इमीडिएट कैश में तब्दील किया जा सकता है, बदला जा सकता है, उसको बोलते हैं हाई क्वालिटी लिक्विड एसेट, जो इक्विवेलेंट टू कैश होता है। समझ में आया? So LCR is nothing but you should have sufficient liquidity with you, that even in a acute stress scenario, even in a very competitive times, in a very difficult times, if everyone wants to withdraw money from your account, you should have at least money to honor these commitments for upcoming 30 days. For that you should have high quality liquid asset. High quality liquid asset means assets that are equivalent to cash, and here in banking term we treat HQLA as the securities, government securities, cash, government securities that is maintained by the bank above the SLR level, where SLR 18% का SLR लिमिट अभी है। तो SLR लेवल के ऊपर जितने भी आपके पास गवर्नमेंट सिक्योरिटीज हैं उसको हाई क्वालिटी लिक्विड एसेट में ट्रीट किया जाएगा। एनी whatever government securities you hold above the SLR requirement is treated as HQLA. Also within the SLR requirements, 2% of your NDTL will be treated as high quality liquid asset, and this is called FALCR, facility under liquidity coverage ratio, that is FALCR. Okay. So what it is saying, earlier जब स्मॉल बिजनेस को या फिर कोई भी स्मॉल बिजनेस जो नॉन फिनेंशियल बिजनेस है, जो फिनटेक वगैरह नहीं है, नॉन फिनेंशियल बिजनेस जो है, 5 करोड़ तक के लोन जो सिस्टम से लिया हुआ है उसको आप स्मॉल लोन वैल्यू कस्टमर बोलते थे, या फिर यू कॉल देम लोन वैल्यूड इंडिविजुअल एक्सपोजर, लेस वैल्यूड इंडिविजुअल एक्सपोजर के हिसाब से आप उसको काउंट करते थे। तो 5 करोड़ तक का जो भी एक्सपोजर आपका होता था, आप उसमें या फिर उसको आप अपने एलसीआर में काउंट नहीं करते थे क्योंकि उसका रिस्क कम होता था। 5 करोड़ से ऊपर जितने भी होते थे आप उसको 75 उसका जो रिस्क वेट था उसको 75% कैलकुलेट किया जाता था। मैं आपको समझाता हूं। पहला पॉइंट नंबर 1, small business now increased from 5 crore to 7.5 crore. Reserve Bank of India has increased the threshold for deposits and other funds of non-financial small business by 50% to 7.5%, 7.5 crore for the purpose of maintenance of liquidity coverage ratio with the aim of better align and regulations with Basel norms, and also enable banks to manage liquidity risk more effectively. So जो स्मॉल बिजनेस हैं, जो स्मॉल बिजनेस नॉन फिनेंशियल कंपनीज हैं, उनका अगर नेट डिपॉजिट आपके पास 7.5 करोड़ तक है तो आप उसको अपने लिक्विडिटी कवरेज रेशियो में उसका 75% रिस्क लेके चलेंगे, या फिर उसका जो रिस्क वेट है उसको 75% कैलकुलेट किया जाएगा। ठीक है, समझ में आ रहा है? क्योंकि स्मॉल बिजनेस है तो क्रेडिट कॉस्ट को कम करने के लिए या फिर उनकी रिक्वायरमेंट कभी भी हो सकता है, तो उसका जो रिस्क वेट है अप टू 7.5 करोड़, उसका रिस्क वेट है 75%। अगर कोई स्मॉल बिजनेस आपके पास 5 करोड़ रुपया डिपॉजिट में रखता है तो आप अपने लिक्विडिटी कवरेज रेशियो में उसका 75% आपको सेव करना होगा लिक्विडिटी कवरेज रेशियो में। वो पहले 5 करोड़ था, इस लिमिट को अभी बढ़ा के 7.5 करोड़ कर दिया गया है। इज इट क्लियर टू ऑल ऑफ यू? इज इट क्लियर नाउ टू ऑल ऑफ यू? You should have sufficient liquidity for meeting your exigencies in next 30 days. So whenever a small business deposits up to rupees 7.5 crore or takes a loan up to 7.5 crore, the entire exposure, if it is up to 7.5 crore, you have to keep aside a certain percentage, say 75% of that amount as liquidity coverage ratio or the risk weight here, right? Is it clear now? Yes, let's go ahead. So the issuing the revised Basel III framework on liquidity standards, liquidity coverage ratio, monitoring tools and LCR disclosure standards and the net stable funding ratio for small business customers. The monetary authority said these revisions are aimed at helping banks manage their liquidity risk more efficiently, because small business, it could be stable or unstable depending upon the working environment. So that's why they have guided, or RBI has guided banks to keep aside 75% of that amount, and that small business will be treated where the entire exposure to the banking industry is less than 7.5 crore. But the new norm retains the net stable funding ratio at 9% of the liabilities as the available stable funding factor, which comprise demand deposit and term deposit and residual maturities of retail and small business customers under 1 year maturity. And for the calculation of Nsfr, whatever the amount these small business will deposit with you, you have to calculate 90% of that amount for your Nsfr purpose. Is it clear? And if all the loan aggregate is up to 7.5 crore, you have to keep aside 75% of risk weight for LCR coverage, and at the same time you have to keep aside 90% of their liabilities or their deposits with you as Nsfr. I will now be telling you what is Nsfr. Nsfr is nothing but the available stable funding ratio by required stable funding ratio, and it should be greater than 100%. Nsfr defines the amount which is available for stable funding relative to the amount required for stable funding. Stable funding means the longer term liabilities are assumed to be more stable than short term liabilities. Okay, so Nsfr means for next 30 days you should have sufficient money for stable funding. Stable funding means where there is less risk. Stable funding means giving loans. You should have sufficient fund to give loans, that is available stable funding. Your required stable funding means you are expecting that in this month of February you have to give loans of rupees 100 crore. To give loan up to 100 crore, you have rupees 10 crore with you as capital, 50 crore as the deposits of your customers. But deposit is not safe because people will withdraw it at any time. So that out of that 50 crore deposit, you will think that 30 crore or 40 crore is stable and others are unstable because people will keep withdrawing money. So now 30 crore from that 50 crore deposit is for stable funding. 10 crore which is your capital is ready with you for stable funding. So available stable funding is 40 crore with you now, and how much you require for stable funding? 100 crore. So it is now less than 100%. So you need more money for stable funding. Clear? So you will get loans, you will take loans, you will raise bonds, etc. for available stable funding. So when you have deposits of that small scale individuals or small scale business, if they have deposit of 5 crore with you, you will treat 90% of that 5 crore, that means 4.5 crore as 4.5 crore as NSFR. क्लियर? क्योंकि 90% आपको कैलकुलेट करना है NSFR में, आप वहां पे 100% नहीं कर सकते क्योंकि उनको भी रिक्वायरमेंट हो सकता है, बाकी का 10% इनस्टेबल हो सकता है, वो कभी भी उठा सकते हैं, दे कैन विथड्रॉ एट एनी टाइम. नाउ क्लियर? There are so many technical things whenever Basel come, there are so many technical things come into effect. Hope you got it. If you are still confused, I will urge, please clear your Basel class from the inside, from our inside sessions. Then watch this video. It will be easier for you because I cannot make it more simplified for banking professionals. ये अगर PO के लिए होता तो मान लेते, या फिर entry level clerical के लिए होता. And my classes are for banking professionals, people looking for RBI grade B, SEBI grade A, and lateral entry exams, RRB scale 2, scale 3, specialist officer, credit manager, risk manager. So I cannot tell you in more detail or more simplified manner. And if you are still not able to understand these things or these technical things, then probably you have prepared in wrong manner. I would urge all of you to go to our courses, enroll to a valid course and feel the difference, and you will find these type of classes inside our application and more extensive classes inside our application. So we discussed about LCR, fall CR, and now NSFR. Detailed sessions are available in Basel, so I don't want to kill your time here. Updated norms on bank finance to NBFCs. तो बैंक जो NBFC को फाइनेंस करेगा उसमें कई नियम चेंज हुए हैं, एंड दिस क्लासिफिकेशन कम्स अंडर सेक्शन 35A ऑफ बैंकिंग रेगुलेशन एक्ट. And the purpose is to lay down the RBI's regulatory policy regarding finance of NBFCs by bank. First key update, it has been clarified that housing finance companies are covered under the ambit of the circular. Banks are permitted to provide partial credit enhancement to bonds issued by systematically important non-deposit taking NBFCs and HFCs. Okay, so they can give loans or credit to the bonds issued by systemically important non-NBFCs, non-deposit taking NBFCs. Banks' exposure to a single NBFC has been increased to 20% of their tier 1 capital from 10 to 15% of capital funds in Master Circular of 2015. Now, bank can give to one NBFC maximum up to 20% of their tier 1 capital. And to a group of connected entities, it is 25% of tier 1 capital. So now I will ask you, what is the large exposure framework norm in respect to single entities and the entities of single entities or the group of connected entities? If you don't have the answer, please cover all our RBI circular gist videos. These are our flagship classes, freely available, or you can download 1 year PDF plus this month's PDF for better understanding of these things. If you are still lacking behind, think of your preparation strategy, think of your mentors from whom you are taking the classes. Time to rethink, time to choose Knowledgist. Key updates 4. It has been clarified that banks may take their credit decisions based on usual factors in relation to microfinance companies, securitization and reconstruction companies, mutual benefit companies, and mortgage guarantees companies. I think all of you know what is the essence of funding to NBFCs for banks. Why banks has to fund NBFCs? This is one type of priorities of banks, and RBI directs more and more banks to fund to NBFCs because NBFC will always have liquidity mismatch. they are always getting loans for short term, and they are lending it to their borrowers for long term. So whenever you take short term loan and fund it for long term, it becomes unstable funding. Related to the Nsfr, it becomes unstable funding. But if you fund your long term liabilities from your long term sources, it becomes a stable funding. Or from your long term sources, if you fund your short term liabilities, then also it becomes a stable funding. But if you fund your long term liabilities from your short term assets, your long term assets from your short term liabilities, then it becomes liquidity mismatch for you. Long term asset means long term loans. If you fund your long term loans by taking short term loans from the market, then it will be problematic for you. Like you have taken 10 lakhs from me and you told me that you will return it to me in 3 months, but you have lent it to someone who committed you to return that amount in 5 months or after 1 year. So you will be in trouble facing me after 3 months, because you promised me to return it to me after 3 months, but your friend has taken from you and told you to come to you after 1 year. So that is really a cash crunch. So that's why more and more banks are doing on lending agreement with Nbfcs. They are buying the portfolios, refinance activities are happening in Nbfcs. So all of this to counter the liquidity mismatch in Nbfc segment. And you know, in financial market, if one Nbfc fail, there will be contagious effect into market. Other banks may fail and the entire Indian financial system may collapse. So again, the key update on Nbfc factor, we will talk a very specific episode on Nbfc factor as I spoke in the economic survey session. So the minimum limit for receivables purchased or financed for income generated from factoring activity or factoring companies has been reduced from 75% to 50% for being eligible to receive bank finance. I will be taking you to the factoring business. There is a new rule which is going to be implemented by RBI, that is the registration of factors regulations of 2022. If you have not clear about factoring business, what is factor, go to my economic survey session. There at the end, before MCQs, I have discussed about factors. I will give you a quick look at factoring business. So under the power in section 3, section 3 read with section 31A, the Factoring Regulation Act 21 of the Reserve Bank of India formulates registration of factor regulations 2022. Nbfc company, any Nbfc company engaged in factoring business and having their principal business coming from factoring business, more than 50% of their principal business coming from factoring is called Nbfc factor, and it's a company registered under section 45I of RBI Act. And also, and the certification is issued under section 3 of the Act, has received the certificate of registration or COR under section 3 of Factoring Regulation Act 2011. Every company seeking the registration as an Nbfc factor should have minimum net owned fund of 5 crore, and the Nbfc factor shall ensure that financial assets in factoring business constitute at least 50% of their total asset, and income derived from factoring business is not less than 50% of their gross income. So any Nbfc which is intend to be a Nbfc factor should have a minimum 50% of their business from factoring. Okay, and any Nbfc ICC wants to change itself to a factoring business, or a ICC means investment and credit company, wants to change itself to Nbfc factor or to get the COR certificate of registration as a factor, as a Nbfc factor, should have not accepting or holding public deposits, total asset of more than 1000 crore, meeting the NOF requirement of 5 crore, and should have regulatory compliances. So what is factoring? Factoring is an important source of liquidity worldwide, especially for MSMEs. Factoring is the transaction where the entity sells its receivables to a third party to get immediate fund. That means you purchased one computer from me, you have to pay 1 lakh rupees to me. It's a high-tech computer, so you have to pay me 1 lakh. I'm the shopkeeper, you have to pay me 1 lakh, but you have not received your salary. You will give it to me once you get your bonus, and your bonus will be credited in the month of April. So I have to wait for 3 months, but I have signed a bill in your name, or you signed a bill in my name, that after 3 months you will pay me 1 lakh rupees. But I need fund immediately to purchase another computer and to sell it to generate profit. So what I will do, I will go to a factoring company, I will sell that receivable to them, and I will get 90,000 or 80,000 or total 1 lakh rupees I will get, and the factoring business entity or the NBFC factor will get interest from me, and at the end you will not pay me back that money. That NBFC factor will go to you and collect that 1 lakh rupees on due date. Okay, there are without recourse factoring and with recourse factoring. In without recourse factoring, factor bears the risk of default. In case you default, the risk will be with the factoring company. Without recourse factor, or if it is with recourse, then the factoring company and I will bear the loss. I will help the factoring company to collect money from you, and if it is not collected, I will pay certain sum of amount, or total, or in totality, or percentage of that, whatever is mentioned in the document. And factoring is totally different than bill discounting. In bill discounting, certain percentage of the amount is given to the seller, or if the bill is discounted, I will go to a factoring company, or I will go to a bank, or I will go to RBI, or I will go to any company who discounts the bill. I will discount the bill. That means 1 lakh is receivable, so bill is discounted. Discounted is means reduced, so I will get 80,000 rupees. Okay, and most cases seller has to take the responsibility for payment of invoices of the buyer, and at that case of bill discounting, I have to take responsibility for collection of the money, right? So it is the Factoring Amendment Act 2021 is all set. It is by UK Sena Committee, under UK Sena Committee recommendation. The Factoring Regulation Amendment Act 2021 is enacted. There the principal business norm will be repealed. Okay, and now factoring is done manually under trades. Trade is the trade receivables discounting system of RBI, and this trades platform to register charge directly with Central Registry of Securitization, Asset Reconstruction and Security Interest, or SARSAI. So charge creation, you know, I have taken all this in credit management class, so please go through and know various types of charge creation. But in trades platform, whenever the factoring business will happen, the charge is to be registered under SARSAI portal. SARSAI portal is created as per SARFAESI Act 2002. So now the time is for MCQs. Hope all of you got the concepts clear. So now the time is to start the MCQs. Before that, in case still someone is new and not subscribed to the channel, kindly subscribe, and you can find out our yearly RBI circular gist in the links in the description, and don't forget to join one of our valid courses. So question says, nowadays also lengthy questions come into effect, so we put it for you as at par with the real level of question making. And as you know that we have enhanced our question making team or content making team with the virtue of your love and support. So nowadays the relevant questions will be on your screens, and the coming 5, 6 to 7 or 8 questions will be of exact level of banks. And we are also proud to share with all of you, in all recent exams 90% of questions were directly asked in banking segment from our question bank. So that is due to the extensive research we have done in this period. Yes, time is for the questions. Which of the following points are correct with respect to the RBI's framework regarding small value offline digital payment? Point number 1, and these questions need to be understood clearly. The answer you will find if you understand the question clearly. So what is the right answer in terms of offline digital payment. Offline payments can be made using cards, wallets or mobile devices, but the payments should be done in face-to-face mode only. Upper limit of the offline payment transaction was fixed at rupees 500, total 10,000 at any point of time. The framework will enable the authorized payment system operators, payment system participants or bank and non-bank to conduct small value offline digital payment. Which one is the right answer? Only B is the right answer? Only A and C is the right, or all A, B and C is the right answer? I will give you not more than 5 seconds to answer. Just read it clearly, you will find the answer because we have covered it all. So elimination you can also work because it is not about 500 1000. You can eliminate B. If you eliminate B, A option option number A disappears, then option number D disappears. Now on your screens B and C, you have made a 50-50. So out of B and C, one could be the right answer. So you put your elimination knowledge how to eliminate things. So it talks about using cards, wallets. When you talk about wallets are online mode. So wallets cannot be the answer, right? Wallets cannot be the answer. Is it right? Is it so? What do you think? What do you guys think? The right answer is C, A and C. To push digital transaction in rural and semi-urban areas, the Reserve Bank of India issued a framework allowing the transaction 200 to 2000. And here is wallet means it may operate in offline mode. Okay, even if the network connectivity is not there, now wallets will be given the power to do offline transactions. RBI small value offline digital payment requires AFA. So what doesn't require AFA? It is wrongly mentioned. It doesn't require additional factor of authentication. So what is the acronym of AFA or the second A of AFA? That means the last A. Authentication, authenticity, authority, none of the above. Additional factor. So sorry. I have told you the answer. Okay, that is AFA. This is nothing but the additional factor of authentication. That means whenever you do a card payment, you get an OTP in your phone or in your mail, right? So, or it redirects you to enter a PIN, or it redirects you to enter your CVV number. You put your card number, but it will redirect you to open enter your CVV, then a PIN code, temporary PIN code, then your OTP, etc. So that is additional factor of authentication for more safety purpose, right? So question number 3, RBI's framework regarding small value offline digital payment transactions are expected to give a push to digital transactions, particularly in which areas? Urban and semi-urban, semi-urban and village, metro and urban, semi-urban and rural. So if you have seen question making nowadays, so anything can be framed as a question, and the question makers are nowadays, I will tell you what happens, how the questions are nowadays being made. So these notifications, these circulars, the rules, the acts, the regulations, various acts, BR Act, Banking Regulation Act, RBI Act, the acts related to banking updates are given to the question maker. They are now told to find out questions which is not popular in nature or not in circulation. Like for many years, one type of question is being asked, what is the full form of PSL, when the Reserve Bank of India is RBI is enacted, the history of banking. These questions are often asked. So the question makers nowadays want to revisit their question making style and to create questions which are not conventional in nature or is not predictable. So they find out an act, they read an act, and they delete few things and they ask you what should be the answer. If you have appeared these exams, last 3-4 exams consecutively in the segment of specialist officer, journalist officer, RBI grade B, SEBI, etc., you will find out the question making has really changed. The art of question making has really changed, and your time has stopped. Your right answer is semi-urban and rural is the right answer here. Hope you got this. Let's move to the next question. RBI notifies market making plan to promote retail participation in G6, a market making arrangement wherein the primary dealers shall be present on the NDS OM platform. What is the acronym of S in NDS? Security, sample, system, or start? So nowadays they also give you a long statement, and at the end they will ask you a tiny question, and the question is nothing but to tell you about the full form of NDS, or in NDS what S stands for. I hope all of you have seen me saying that when we cleared that particular circular, that is NDSOM, order matching negotiated dealing system, right? Yes, it is an electronic transaction. Under the RBI Retail Direct Scheme, retail investors have the facility to open the online RDC account with RBI. These accounts can be linked to either their savings bank account, and now elaborate or expand RDG, Retail Disinvestment Guild, Retail Direct Guild, Retail Direct Goods, none of the above. Elimination can work here, even if you don't know the answer, but I strongly believe all of you know the answer. The right answer, I will not make you wait anymore, it is Retail Direct Guild account. Every company seeking registration as NBFC factor shall have a minimum net fund of rupees dash crore, 5 crore, 50 crore, 500 crore, 100 crore. Right answers please. 5 crore, 50 crore, 100 crore. Your answers please. So the right answer is nothing but option number A, 5 crore. The Reserve Bank of India notified the inclusion of Airtel Payment Bank in the second schedule of RBI Act. So schedule bank means they maintain a cash reserve ratio with RBI. They are authorized to borrow funds from RBI. They are comparatively more financially stable. Which one is the right answer? A and B, A and C, all A, B, C, or none of the above? I hope we covered it and you should have remembered it clearly. There should be a pictorial image on your minds, because we covered it as it is, and it means all of the above. Okay, right? A, B, C, both, all three are the right answers. Reserve Bank of India increased the threshold for deposits and other funds of non-financial small business from rupees dash crore to rupees dash crore for the purpose of the maintenance of LCR. 5 crore to 10 crore, 5 crore to 7.5, 3 crore to 5 crore, none of the above. I hope it is damn easy. We covered it. There is nothing but 5 crore to 7.5 crore. I will not be wasting your times. And the last question on your screens, RBI issues guidelines on bank finance to NBFCs under which section of Banking Regulation Act? 1949, 35AA, 35A, 2020, 2022, 22 only, 2022 has been so popular. So yeah, then 23. So which one is the right answer? 5 seconds for you. Hope all of you got it. You remember it. I told it twice during the class. It is under section 35A. And what the 35A says, under Banking Regulation Act, power of the Reserve Bank to give directions. 35AA says power of central government to authorize Reserve Bank of India issuing direction to banking companies to initiate insolvency resolution process. Section 22 talks about licensing of banking companies. 23 talks about restrictions of opening new and transfer of existing places of business. This all is covered under RBI, sorry, Banking Regulation Act. All of these are very important, and we have covered all of them systemically inside our classes. So don't hesitate to register, because it's all about future. And I always say, when it is about your future and your career, choose the best one. And the best one in terms of banking knowledge, the best one in terms of teaching capabilities, the best one in terms of contents. So we are here to be remembered for our contents, for our teaching, not for anything else. So choose your mentor wisely, choose your platform wisely, choose everything wisely. Thank you for being with us. Join us in various social media sites. We are very popular in other social media platforms too. We are more than 10,000 followers in our LinkedIn platform, which is not mentioned here. Just search Knowledgist in any social media platform, be it Facebook, be it LinkedIn, be it Instagram, you will find us. And in all social media different social media platforms, we give different kind of updates for your benefits. Like in Instagram, we provide you updates on banking MCQs, or on the go, we give you did you know or the banking facts. And in the Telegram or in other sites or in LinkedIn for that matter, we give you updates regarding jobs, updates, various video updates, etc. So thank you for your love, support, and your time. Don't hesitate to subscribe if you have not subscribed us yet.